What's happening, Pulse Nation? Get ready to rev your engines because the news cycle is moving at warp speed, and we've got the inside track on the stories that are shaping tomorrow, today. You won't want to miss these critical updates that are setting the pace for industries worldwide. Today, we're kicking things off with a deep dive into the very bedrock of global technology, the semiconductor industry. We'll be uncovering the intricate trade secret ecosystem and what it means for the security of supply chains everywhere. Stay locked in, because the pulse of progress beats right here, right now. Next up, we're shifting gears to explore the strategic financial decisions that build resilience. We'll be dissecting a fascinating fixed-income strategy that's proving to be a blueprint for navigating a rapidly changing and sometimes fractured global landscape. Get ready to understand the smart money moves that are keeping key players steady. But it's not all smooth sailing. We're also tracking a significant market moment that saw a major player take a considerable dip. What's behind this sudden sell-off? We're getting to the bottom of the factors causing this sharp decline and what it signals for the wider market. And to round out our coverage, we're investigating why a particular industry titan dipped more than the broader market. We'll break down the specific reasons, the analyst perspectives, and what it all means for investors. Stay locked in, because the pulse of progress beats right here, right now. Don't forget to like, subscribe, and hit that notification bell so you never miss a beat. Unraveling the secrets, TSMC's trade secret ecosystem. The very foundation of our modern digital world rests on the intricate processes and innovations within the semiconductor industry. At the heart of this complex ecosystem lies Taiwan's Semiconductor Manufacturing Company, or TSMC, a titan whose manufacturing prowess underpins countless technologies we rely on daily, from our smartphones to advanced artificial intelligence systems. But the brilliance of TSMC doesn't just lie in its state-of-the-art fabrication plants. It's deeply embedded in its carefully guarded trade secrets, forming a unique and vital ecosystem that has profound implications for the security and stability of the global semiconductor supply chain. Understanding this ecosystem is crucial, as it represents a delicate balance of innovation, intellectual property, and geopolitical strategy. TSMC's success is built upon decades of relentless research and development, culminating in proprietary manufacturing techniques, chemical compositions, and process flows that are the envy of the industry. These aren't just simple recipes. They are complex, multi-layered methodologies that allow TSMC to produce the most advanced chips with unparalleled precision and yield. The company invests billions annually to maintain and enhance these secrets, viewing them as its most valuable assets. This commitment to secrecy is not merely about protecting intellectual property. It's about maintaining a competitive edge in an industry characterized by rapid technological advancement and intense global competition. The ability to consistently push the boundaries of what's possible in chip manufacturing, achieving smaller process nodes, improving power efficiency, and enhancing performance, is directly tied to the secrecy and refinement of these core manufacturing secrets. The implications of this trade secret ecosystem extend far beyond TSMC's bottom line. In a world increasingly reliant on semiconductors, the security and resilience of the supply chain are paramount. TSMC's dominance means that any disruption or compromise within its trade secret framework could have ripple effects across numerous industries, from automotive and consumer electronics to defense and telecommunications. The company operates in a complex geopolitical landscape, and the protection of its intellectual property is intertwined with national security interests. Ensuring that these trade secrets remain secure is not just a corporate responsibility, it's a global imperative. This involves robust cybersecurity measures, rigorous internal controls, and strategic partnerships to safeguard its innovations against industrial espionage and other threats. The very architecture of global technology supply chains is, in many ways, dependent on the integrity of TSMC's protected knowledge base. The company's ability to innovate and produce at scale is directly linked to its capacity to keep its most critical processes under wraps, a feat that requires constant vigilance and significant investment in security infrastructure and personnel. This intricate web of protected knowledge forms the bedrock upon which TSMC's unparalleled manufacturing capabilities are built. It's a system that fosters continuous improvement and allows the company to stay ahead of the curve. But it also raises critical questions about supply chain dependency and the broader implications for global technological development and security. The community is keenly aware of TSMC's pivotal role, with analysts and industry leaders frequently discussing the company's strategic importance and the challenges of maintaining such a protected ecosystem in an interconnected world. The ongoing dialogue centers on how this secrecy impacts broader market access, innovation diffusion, and the geopolitical stability of technology. But how does a company protect such vital secrets while also building for the future? We'll explore TSMC's strategic financial moves next. We're diving into TSMC's fixed income strategy and what it means for resilience in a fractured world. TSMC's resilience blueprint, navigating a fractured world with fixed income. In the high-stakes arena of global manufacturing, particularly in the semiconductor industry where innovation cycles are relentless and geopolitical winds can shift dramatically, strategic financial management is not just important, it's foundational. Taiwan's semiconductor manufacturing company, TSMC, a dominant force in chip production, has long been recognized for its technological prowess, but its robust financial strategies are equally critical to its enduring success. One such strategy that warrants a closer look is its approach to fixed income, which serves as a compelling blueprint for building resilience in an increasingly fractured global economic landscape. This approach is more than just borrowing money. It's a calculated maneuver to ensure stability and operational continuity amidst uncertainty. TSMC's fixed income strategy is characterized by a prudent and long-term perspective. Rather than relying solely on short-term financing or equity markets, the company has historically maintained a diversified funding mix, with a significant emphasis on issuing bonds and other forms of debt. This isn't about taking on excessive risk. It's about securing capital at predictable costs, which is invaluable in an industry that requires massive, ongoing investment in cutting-edge manufacturing facilities and research and development. By locking in interest rates through fixed income instruments, TSMC can better manage its capital expenditures, forecast its financial outlays, and insulate itself from the volatility of fluctuating interest rates. This predictability is essential for long-term planning, especially when building multi-billion-dollar foundries or investing in next-generation process technologies that take years to mature. Furthermore, TSMC's fixed income strategy plays a crucial role in reinforcing its financial resilience. In a world where supply chains are increasingly complex and subject to geopolitical pressures, trade disputes, and unexpected global events, having a strong balance sheet and access to stable, long-term funding is a significant competitive advantage. By issuing bonds, TSMC can raise substantial capital to fund its capital-intensive operations, invest in new capacity to meet soaring demand, and maintain its technological leadership without being overly reliant on the vagaries of the equity markets. This strategic use of debt allows the company to weather economic downturns, absorb supply chain shocks, and continue its growth trajectory. It provides a financial buffer that enables strategic decision-making, such as acquiring new technologies or expanding into new geographical markets, without compromising its operational integrity. The company's disciplined approach to debt management, often characterized by maintaining strong credit ratings, ensures that it can access capital markets efficiently and at favorable terms. This financial strength not only supports its operational needs, but also enhances its standing with customers, suppliers, and investors, reinforcing its position as a stable and reliable partner in the global technology ecosystem. Analysts often point to TSMC's conservative financial management, including its adept use of fixed income, as a key factor in its ability to consistently outperform competitors and navigate the inherent cyclicality of the semiconductor industry. The market watches TSMC's financial maneuvers closely, viewing them as indicators of industry health and strategic direction, with many seeing its fixed income approach as a benchmark for stability. This strategic financial footing is vital, especially when market forces cause sudden shifts. We're looking at one such event next. We're investigating what's behind a recent, sharp decline in TSMC's stock price. TSMC's sudden plunge, decoding the 3.1% sell-off. In the dynamic and often volatile world of stock markets, even the most established giants can experience significant fluctuations. Taiwan's semiconductor manufacturing company, TSMC, a cornerstone of the global technology landscape, recently saw its stock price take a notable tumble, shedding 3.1% in a single trading session. This kind of sharp movement in a company of TSMC's stature naturally raises questions. What triggered this sudden sell-off, and what does it signify for investors and the broader market? Understanding the factors behind such a decline is key to navigating the complexities of equity investments, especially in a sector as critical and sensitive as semiconductors. The immediate reasons for TSMC's 3.1% dip are multifaceted, often stemming from a combination of market sentiment, macroeconomic indicators, and specific company or industry news. While the exact catalyst can be elusive, such drops typically reflect investor concerns about future growth, profitability, or geopolitical risks. For TSMC, these concerns might relate to shifts in demand for certain chip types, concerns about inventory levels across the tech sector, or even broader economic slowdown fears that could impact consumer spending on electronics. Additionally, the semiconductor industry is highly sensitive to global trade policies and geopolitical tensions, particularly given TSMC's strategic location and its role in supplying critical components worldwide. Any news or speculation related to trade restrictions, international relations, or supply chain vulnerabilities can quickly translate into significant stock price movements. Analysts often look at a range of indicators to explain such sharp declines. These can include shifts in analyst ratings or price target revisions, a lack of positive news from the company itself, or negative commentary from industry peers or competitors. In TSMC's case, the sell-off might also be linked to broader market trends. For instance, if the overall tech sector experienced a downturn due to rising interest rates, inflation concerns, or a general risk-off sentiment among investors, even a company as fundamentally strong as TSMC could be pulled down with the tide. The company's recent performance relative to its peers and the broader market indices, like the S&P 500 or the Nasdaq, provides crucial context. A dip that is significantly larger than the market average suggests that there might be specific factors affecting TSMC more directly. Furthermore, upcoming earnings reports or guidance from TSMC can create anticipation and nervousness among investors. If there's uncertainty about whether the company will meet its projected earnings or revenue targets, or if management hints at potential headwinds, it can lead to a preemptive sell-off. The market is constantly trying to price in future expectations, and any perceived threat to those expectations can trigger a rapid adjustment. The community's reaction to such a drop is often swift, with many investors seeking explanations and reassessing their positions. Social media, financial news outlets, and analyst reports buzz with speculation, trying to pinpoint the exact cause and predict the stock's future trajectory. The sell-off serves as a potent reminder that even market leaders are subject to the ebb and flow of investor sentiment and macroeconomic forces. This market reaction highlights the sensitivity of tech stocks to broader economic conditions. We'll look at a specific instance of this next. We're breaking down why TSMC dipped more than the broader market on a recent trading day. TSMC's dip versus the market, unpacking the performance gap. In the intricate dance of the stock market, understanding relative performance is just as crucial as tracking absolute gains or losses. Taiwan's semiconductor manufacturing company, TSMC, a global leader in chip manufacturing, recently closed a trading session at $231, marking a 3.05% decline from its previous close. What makes this movement particularly noteworthy is that it trailed the broader market indices, with the S&P 500 losing 0.64% and the tech-heavy Nasdaq experiencing a more significant drop of 1.15%. This divergence suggests that factors specific to TSMC or the semiconductor sector may have been at play beyond the general market sentiment. Looking at the recent past, TSMC's shares had already seen a slight dip of 1.39% over the preceding month. In stark contrast, the broader computer and technology sector, which TSMC is a part of, had gained 2.91% during the same period, and the S&P 500 index climbed by 1.91%. This performance gap indicates that while the technology sector and the overall market were showing resilience or even growth, TSMC was experiencing its own set of pressures. Such a trend often prompts investors and analysts to scrutinize the company's fundamentals, future outlook, and any company-specific news that might explain this underperformance. Anticipation for TSMC's upcoming earnings report is a significant factor influencing investor sentiment. Projections indicate earnings of $2.56 per share, representing a substantial year-over-year growth of 31.96%. Revenue is also expected to surge, with a consensus estimate of $32.31 billion, up 37.48% from the prior year. For the entire fiscal year, forecasts are even more robust, predicting earnings of $9.83 per share and revenue of $122.4 billion, marking increases of 39.63% and 35.88%, respectively. These figures paint a picture of strong underlying business growth, making the recent stock dip appear somewhat counterintuitive to fundamental performance. Investor sentiment can also be influenced by adjustments in analyst estimates, which often serve as a barometer for short-term business momentum. TSMC's Zacks consensus EPS estimate has seen a slight decrease of 0.43% over the last 30 days, contributing to its current Zacks rank of 3 hold. While a 3 rank suggests a neutral outlook, the context of estimate revisions is crucial. The company's valuation metrics, such as a forward P/E ratio of 24.25, are currently in line with the industry average, and its PEG ratio of 1.13 also mirrors the semiconductor circuit foundry industry's average. The industry itself ranks well, within the top 41% of all industries. Despite these generally positive indicators, the recent stock performance suggests that market participants might be factoring in future uncertainties, potential competitive pressures, or broader macroeconomic concerns that outweigh the current strong financial projections. Community discussions often revolve around whether these dips represent buying opportunities or signals of underlying issues not yet fully reflected in the company's reported financials. This detailed look at TSMC's market performance highlights the complexities investors face. For further insights, consider exploring specific growth opportunities within the semiconductor space. Stay tuned as we continue to bring you the crucial updates that matter. And that's a wrap on today's Pulse. We've seen TSMC navigating its trade secret ecosystem, fortifying its position with smart fixed-income strategies, and weathering market dips. Don't miss out on the next wave of innovation. Hit that like button, subscribe to Qualcomm Pulse, ring the notification bell, drop your thoughts in the comments, and follow us on all social platforms to stay connected. We'll catch you in the next one.